Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders to the COT data, so essentially what hedge funds and the big players in the market are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing and rejecting to the upside a quite strong historical monthly support and demand area. From here, in fact, all these previous rejections to the upside have been created. And what we can notice is that just a few months ago, the market tested the exact same zone and is currently in the process of rejecting it to the upside. So from a monthly standpoint, everything seems quite bullish, and more bullish price action could be expected away from this level. We can also notice, if we look more in detail here, that the market has also created some intermediate structure exactly at this level, which was respected as resistance in multiple occasions, starting from here, then again here, then again here, and then again here. And now the market has broken it to the upside. And what we know is that a previous level of resistance, once it is broken to the upside, it becomes support. So the market is currently testing this quite strong level of previous monthly resistance turn support. We can also notice that if we look at the pattern that the market has been creating, we can notice a very clear impulse followed by a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.618 and 0.786 Fibonacci retracements lining up exactly at this area, creating a confluence of support. And we have confluence of support when there are multiple layers of support lining up in the same level of price. And when there is a confluence of support area, there is an increased probability of seeing institutional longing inside of the level. So let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, we have a quite interesting pattern because we can notice here how the market has just created this M pattern. Now, in general, after the creation of an M pattern, the next logical step would be for the market to go and complete the pattern at the neckline. This, in my experience, is how when there is such pattern, there is an increased probability that the market will in fact go and complete the M pattern. We can see, for example, one here after the creation of the M pattern, the market goes and completes the pattern at the neckline. Now, it's not every time, but when there is such pattern, there is an increased probability of seeing a potential push higher. And in this case, we also have the monthly support. So for me personally, I think there is an increased probability of seeing this potential push higher. Dropping down on the daily time frame, what do we have? Now, from a daily perspective, we can notice how the market has created a series of lower lows and lower highs, breaking structure every time. So we still have bearish structure from a daily perspective. Now, before we dig into more details into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and let's check the data precisely for the GBP. Now, if we're looking at the data for the GBP, we have to keep in mind that we already are looking at GBPUSD because all currencies on the spot are traded against the USD. And we can notice how with the last reports, net positions have been slightly decreased. So if we want to see an increase of the net positions, we should start to see institutions adding longs and closing shorts on GBPUSD, which at the moment we're still not seeing. So we have to keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So from a daily perspective, if the market here will provide this push to the downside, at that point, that is where, in my opinion, there is an increased probability inside of this a support level that we have identified on the monthly to start to see some institutional longing and start to see net positions getting increased. So if that will be the case, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing the weekly and pattern the neckline. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in the description. Here, you have the possibility to gain access to the most complete mentorship program ever. You have the possibility to gain access to all my courses, which will guide you from the basics to the most advanced topics like automated algorithmic trading using the MQL4 language. Then you will also gain access to the trading station software with a Telegram notifications integration directly on your panel. You will also have the possibility to have one-on-one mentoring directly with me, as well as having access to the COT data software, which is the one that you see me use very often in my videos. And if you continue to scroll down on the website, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.